Hi, my name is Jim Brees from GreenGrowth CPAs, and today I want to talk to you about how filing your cannabis taxes incorrectly will cost you and your company a lot of money. So as a cannabis operator, you're probably sick of having to contend with the many and frequent taxes due to the state and local government. And look, we totally get it, but they're not going away, so let's approach this problem logically and practically so we can reduce your tax burden and make sure you're paying properly. But what many operators don't realize, however, is that they're likely under-collecting taxes from their customer. And this causes cannabis businesses to shoulder more costs than necessary, as I will show you in this presentation. Also, some operators are actually overpaying their taxes unknowingly. And if you hear that and you're like, oh, maybe I should find a way to reduce my taxes, then let's continue listening and watching, and I'll show you exactly how this is happening in your business. But really, why does this happen? Well, there are two main reasons why this happens and why cannabis operators are uninformed about these particular aspects of cannabis taxes. And in this video, I will discuss with you how cannabis operators can fix their tax collection strategy to benefit their bottom line. But before I do, I need to let you know that the information contained in this presentation is meant for guidance purposes only and not as professional legal or tax advice. And further, it does not give any personalized legal, tax, investment, or any business advice in general. So with that out of the way, let's hop right into our agenda for today. So first, I'm going to cover some tax classifications, introducing and understanding what a business versus a consumer tax is. And then we'll cover the two problems. So problem number one is improper cannabis tax calculations. We'll go over two examples, one with a business tax example and then a sales tax example. And then we'll tackle problem number two, incorrectly defining the term gross receipts. And finally, we'll review some key considerations for charging taxes to your customers. So one reason why operators don't collect enough taxes from their customers is because they're not calculating their tax responsibility correctly. So let's start with the basic understanding of how taxes are classified in the state of California. Now, a local tax is considered a business tax and not a consumer tax. For example, a sales tax is a consumer's tax. It's a tax that you collect from the customer and then you remit it to the state of California or New York or whatever state you're actually in. And sales tax is typically a percentage amount that your customers actually pay to you when they purchase cannabis from your business. Then, as the cannabis business owner, you must pass that tax collected to the state or the local authority, right? It's not always just a state tax for sales. It can be a local sales tax as well. And in this instance, you're simply the middleman for this tax. You don't benefit or get hurt by this. You just collect it and give it back to the local authority or the state authority. Now, a business tax, conversely, is something that you can't fully collect from the consumer or the customer as you would a sales tax. And an example of a business tax for a small business would be income tax. Your income tax is the amount you pay on your total income from your cannabis business to the federal and state governments. For cannabis business owners, you may see a business tax that is 5% of your gross receipts, and we'll talk about gross receipts later in this video. Now, the tax exposure problem of miscalculation occurs when a cannabis operator collects a business tax from the consumer. When that happens, the governing tax agency will tax you on the amount you collected from the consumer as well, because it's part of your gross receipts, meaning that you'll get taxed on that tax that you actually try to pass on the customer, and that's why you can't fully collect it from the consumer. So let's look at a business tax example of this. So for example, let's imagine that you sell a cannabis product for $10. And let's also assume that your business tax is 10% of gross receipts. So in scenario one, if you were to only collect that $10 of product cost from the customer, which would be $10 in gross receipts, then $1 is due for local business tax. But in scenario two, on the right-hand side, if you charge or try to pass on that $1 business tax to the consumer, then you're taxed on the $10 for the product and the $1 of the business tax that you collected from the customer. So in this case, gross receipts is defined as $11. The tax calculation here would then be $11 times the 10% business tax rate, so $1.10 in business tax. But let's look at the net impact of these two scenarios. In scenario one, you're footing the entire $1 in business tax. But in scenario two, you're only coming out of pocket for 10 cents since you collected $1 from the customer. As you can see, this can have a significant impact on your bottom line over time if you have to consistently come out of pocket for that full dollar in tax. While it's a good strategy to pass on some of your business tax onto your customers, be aware that you must file your taxes properly when it comes to declare your gross receipts. And customers coming to licensed shops, they know they're going to be taxed, and many customers are willing to accept part of the responsibility of paying your business tax in your sales price, as long as you break it out on the receipt and itemize that receipt for them. And it's a good strategy to be transparent in everything that you do, but especially when you're passing along some of the costs of running your business. And in many, if not most cases, when we do our onboarding and audits of new clients, we're seeing that many operators are opting to pass on some of that business tax onto the customers, but they are just remitting that $1 they collect, which means that many operators are underpaying their tax liability by 10% or whatever their local business tax rate is. And this is a huge problem because, underpaying your taxes is going to result in fees and penalties and interest and all the things that you don't want to have to deal with. Now that we've looked at a business tax example, let's look at a sales tax example. We also see another big tax mix-up very commonly in sales tax calculations. That's why I want to go over this here. So remember that the cannabis operators pay sales tax to the CDTFA, and they are just the middleman as an operator. They don't benefit or get hurt by this tax. They just collect it and remit it out to the CDTFA. So let's assume the same product cost of $10, and let's say sales tax is 10% of your gross receipts. So in scenario 1, again, if you don't collect the business tax from the consumer, then it would look like this. $10 for the product, which means $10 in gross receipts, and sales tax is $1 because it's 10% of that $10 in gross receipts. The full amount to be collected from the customer is going to be $11. And for scenario 2, if you do collect some business tax from your customer and then you break all the taxes out on a receipt, it'll appear to the customer as this, okay? So you have $10 for the product, $1 in business tax, which means $11 in gross receipts. Sales tax is calculated on that $11 in gross receipts, so it's 10% of 11, which is $1.10. So the full amount to be collected from the customer in scenario 2 is $12.10. Remember, as we explored earlier, you still need to pay the business tax, which you didn't collect at all, any of that in scenario 1, which means that you're spending more money on taxes on scenario 1 than if you were to collect some of that business tax from customers in scenario 2. This all still holds true. I just want to show you how you're probably miscalculating your sales tax and undercalculating and undercollecting that sales tax. Now, our tax experts have seen that most uninformed operators collect and calculate sales tax off of the product amount only and do not use the local cannabis business tax if they collect it as part of the base when they use that gross receipts number to calculate the sales tax. So just know, I'm going to say this 3 more times here, you have to understand that if you calculate this wrong and the CDTFA finds out, they will hit you with penalties, fees, and interest that compounds. And this can become very expensive very quickly. So now that you see how you may be under-collecting your taxes and underpaying your taxes, let's show how you actually may be overpaying your taxes. I know your ears probably perked up when you heard that, so let's go and get deeper into this here. So that leads me to problem number 2, incorrectly defining the term gross receipts, right? We've talked about that a little bit throughout this video here, but let's dive a little bit deeper into that. And surprisingly, it's not uncommon for cannabis operators to define gross receipts incorrectly. Pretty much in 90% of the jurisdictions, operators are getting this calculation wrong. So gross receipts is defined as cash collected less consumer taxes, right? So it's the cash you collect minus the consumer taxes. So returning to scenario 2, as in the previous part of this video, remember that local business tax is not a consumer tax. It's a business tax, which means your gross receipts was still $11. However, if you look at scenario 1, you collected $11. $1 of that is sales tax, which is a consumer tax. Therefore, in scenario 1, gross receipts is $10, which we had bolded and you saw that, right? Now, another consumer tax that we see often is the state cannabis excise tax. Understand that the state defines the excise tax and the amount that you are to pay for that, while the local jurisdiction defines what gross receipts are and whether you can actually deduct consumer taxes or not. And as a reminder, excise tax is a consumer tax that dispensaries pay upfront to the distributors, which we discussed in a prior video and blog post on our guide to cannabis taxes for cannabis distributors. So when charging excise tax, dispensaries have two options, right? Number one, they can directly charge 15% to the consumer, or they can say it's included in the cost of the product. And since sales tax is a consumer tax and it's a deductible tax, it is safe to say that excise tax should be deductible as well. But most businesses are not deducting this from their gross receipts. And by not backing this excise tax out, you're likely overpaying your portion of taxes because your gross receipts is inflated. So what are some key takeaways for cannabis operators to know about paying their cannabis taxes? Well, first, we believe you should still collect local business taxes from your customers. This is not a consumer tax, therefore you cannot fully pass it on to the customer, but passing on some of it, as we saw in scenario 2, will still greatly reduce your tax burden. Now next, the majority of cannabis business operators are under collecting their sales tax because they're not defining gross receipts properly, because if you collect that business tax even a little bit, you have to calculate sales tax on that. And this is not good because when you get audited and the CDTFA or whatever local tax authority that collects your sales tax finds out about your underpayment, you're going to be charged penalties, fees, and compounding interest on this underpayment. And again, that can grow very, very rapidly. Now further, if you've not been deducting excise tax from your gross receipts, then you're likely overpaying your local business tax. And this is only true if excise tax is deductible. And that, whether or not it's deductible or not, is spelled out by the local jurisdiction, and it varies from jurisdiction to jurisdiction, obviously. But nearly all places say that excise tax is deductible because it is a consumer tax. Now, hopefully this video has brought you some value and helped you to understand how you're potentially under or overpaying your taxes. So if you think it may be helpful, please reach out to us to conduct a high-level audit on your tax payments to make sure you're putting yourself and your business in the right position to succeed for the long term. You can find us at greengrowthcpas.com or give us a call at 800-674-9050. Thank you for watching and listening. Have a great day, and we'll talk to you soon.